Well, good morning, everyone. Today is March 11th. It's a Wednesday. The news this week, actually, the news today is this morning, talk from New York. Schools are closing down. It looks like this virus is making its way from Asia. Asia's getting better now. Now, ground zero now, if you will, is Europe. And it looks like it's making its way to US if we're not careful. There's a lot of precautions, school closures, there's a lot of health and safety issues that are going on right now in the world. But as far as global economy, things are not doing well. As a matter of fact, just last night, President Trump announced that he may do away with payroll tax for a foreseeable future to help spruce up the economy and companies. That would go a long way, but I don't know what kind of an impact that would have on the economy going forward. So that's a question mark. It may be a band-aid, may be a long-term solution. It honestly depends on how much this virus, this coronavirus, eats out of our economy. It's a parasite. That's what it is. This coronavirus is a parasite. So let's talk about the news and we'll get into the technicals in a bit. Bank of England cut its interest rates by half a percentage point to 0.25%, offered financial liquidity measures in response to the outbreak of the coronavirus. Central banks said the move would help support businesses and consumer confidence at difficult time. Countries are shifting into damage control. That's what I was saying this morning, a few seconds ago. Promoting sweeping control on travel, closures of schools, and cancellations or postponements of sport events and many other public activities. That's what I think is happening in the U.S. right now. There's a huge public organization to curb public activities, any kind of public activities, and I think that's going to be a big help. We want to avoid what happened in Italy. Speaking of Italy, Italy's government announced $28 billion in financial support for healthcare, labor market, and families. That's great, but I think it may be a little bit too late. Australia hasn't gotten there yet, and Australia announced a $1.6 billion virus-fighting package and reportedly plans an additional $6.5 billion in economic stimulus. So things are happening, but again, this is reactive. This isn't preemptive, this is reactive, and that's a major issue. And this coronavirus, from what I understand, is mutating. So there's already 3 different variations of it. And the worst problem of this is that we don't know the full impact of it. It's too early to tell. So talking about economy, U.S. consumer prices were a little softer, but they were still up 0.1% in January. I'm not so sure how much of this takes into account the coronavirus. I would imagine this report is right at the edge of when the coronavirus measures began taking toll. But again, it's a little softer, but it is meeting consensus. If it was 0.2, it would be substantially better, but we're not there yet. But I have to say, in light of what we're seeing right now with the coronavirus, the fact that the U.S. economy is strong, is really strong, is very good because it's gonna prove its value in its stability if, in fact, we have this coronavirus outbreak in America. It looks like we may have it in New York and other smaller cities. Aside from New York, it's not a small city, but it looks like there was some attorney in New York, a lawyer, a religious Jewish lawyer who supposedly infected over 50 people, not intentionally, but I guess he was meeting or doing a lot of public speaking. But it looks like there's a lot of quarantines happening right now in the northeast. But it looks like things are moving south. Again, we are in no man's land right now, which is why volatility, this is the fear level in the VIX and the S&P 500, is now at the highest level ever since 2008. The only time we've beaten this level is 2008, where we went to 54.5. We're right now at 46.5. So we're not that far off. We're only about 20% from the worst fear level ever. Now, let me give you some upside. Bond market. The bond market looked like it peaked out 2 days ago as we expected. If the bond market continues moving lower, even if the stock market stays near the current range, and look, this is the stock market. What you're seeing in red is the overnight session. I'm looking at the E-mini S&Ps instead of the S&Ps because it takes into account the overnight market. But I'm expecting this congestion to continue. I will be very, very happy if we do not break this low. The low on the S&P is 26.95. If you're looking at the SPY, that would be 20. Let me actually go to the SPY and show you the exact number. Write this number down. It's important. The number on the SPY is, look at this, the price levels went so low, it's hard to even get the low. The lows on the SPY, remember this number, because we hit it already twice, 273.50. I would put some alerts there, and that's actually medium-term support level. Let me show you a better chart. Here's a 2-year chart. As you could see, we're very, very close. Right there is medium-term support, right around this area. I mean, you got to give or take a few points, but right around, we're there right now. So right around the 273 level on the SPY, if we could stay in that level, that would be very, very positive. And if you're trading the E-mini S&P or looking at the E-mini S&P, that level would be 2693 or about 2700, if you will. So 2700 on the E-mini S&P and on the SPY. Again, I want you to write this down. And on the SPY, right around 273. So 2,700, 273, just take a zero off. But that's what you need to look at. Focus on the bond market. So far, we're congesting on the SPY. Let me go back to that. I keep going back and forth. So far, we're congesting. What we may be seeing is lower volatility and a triangle or a congestion range. That would be very good. But the problem with that is usually they don't give us a bias of which direction the market will break in, but at least it'll slow down volatility. Again, the bond market is the best indication of whether or not stocks and panic will become subdued or become increasingly explosive. As of right now, for the last 2 days, bond market is cooperating. If you see the bond market, this is the 30-year bond. This is the long bond. If you see the bond market break below 177.30, that's positive. If you're trading the TLT, which is the ETF that tracks the long bond, that level will be at 161.87, and look for this gap to become filled right here. As far as the overall market, here's the prognosis. This is the indicator that gave me a very, very, very strong indication that the market was going to sell off. Not because of coronavirus, just because it was overbought. We had over 80% of stocks trading above the 200-day moving average. Well, that's now changed. Now we're only at the 25th percentile. Only 25% of stocks in the S&P 500 are there. Now, we've never gone below 4%, and I don't think we will. But we can go a little bit lower, maybe about 20%, 18%. The paramount point that I'm making here for you is I think the worst is behind us. Unless there's something completely new, something totally out of left field, something that the economy has not taken into account. Like, for example, these are examples, hypotheticals, could be. I don't have a time machine. Hopefully this will never happen. But let me give you some scenarios. Let's say that news reports come out and say that half the cities in America are infected. That would be a big catalyst. Let's say that they say that the virus implications are worse. Something worse than we are anticipating, even in the worst case scenario. The markets, when they're in fear mode, especially when VIX is at 46, they're panicking. Markets are scared. They're anticipating the worst case scenario of anything that's known right now. But remember, there are things coming out in real time that are not known. For example, let's say we find out tomorrow. Again, these are all hypotheticals. I don't know, and I hope none of this happens. I'm just throwing things out there. Let's say we find out that California has a huge infection. Let's say we find out South America is now infected. Let's say we find out that we have to close down half of the schools in the country. Things like that, things that make things that create a worse scenario and a worst case potential follow-up scenario than we're in right now. Now, the most likely scenario is we're going to stay in this range for the next few days, and we're going to go higher. But again, I'm not 100% sure if the put-to-call ratio is already bottomed out. Also, and I'm going to say this again, you're probably sick of me hearing me talking about it, but I got to say it. Also, I got to talk about the NASDAQ one last time, and I'll let you go before I finish up here. If you look at the NASDAQ, only 36% of stocks are trading below the 200-day moving average. If you look at the S&P 500, it's closer to 20%. That circle we drew about 2 weeks ago, and it took us to the 25th percentile, but now we bounced back. Now, I'm hesitant because if you look at the long-term chart, every crash we've had, the NASDAQ gave out. Look, 2012, we came down here and we stayed here for a while, but we haven't got there yet on a weekly basis, just on a daily basis, or this is a monthly basis. I'd like to see the NASDAQ come down here and stay here for a little while. If you look at the 1 year basis, daily basis, we did it, but not on a monthly basis. Let's see, on a weekly basis, did we do it? Let's take a look. Not on a weekly basis. See, if you look at this over the last, since 2008, notice 4 or 5%, but notice every other time we came to the red line. We haven't done that yet. And that's giving me hesitation. So there may be a little bit more downside, more congestion, but I do like the fact that bonds are cooperating. I do like this. This is very important, the fact that we are already breaking down 2 days, filling in the gap. This is good. The next step would be lower volatility. Till volatility starts falling down, there's no soup. Now, folks, before I let you go, let me just look at my numbers here and my dates. I want to let you know something big. This is really, really big. If you need help during this volatile market, and yes, markets are volatile, they're very unpredictable, there's a lot of stuff going on right now. I urge you to click this link below and attend my live class. It's happening Thursday, tomorrow, 1 p.m. Eastern Time. 1 p.m. Eastern Time. That's 10 a.m. Pacific Time. That's noon Central Time. 1 p.m. Eastern Time. You do not want to miss it. You do not want to miss this. I can't even speak anymore straight. Folks, I developed a system that'll help you profit during and after huge market crashes. That's right. I actually, imagine that. I actually thought ahead of time and I created a system. It makes a lot of money during bull markets and it kills it during bear market and market crashes. This is not a bear market. This is just a short-term market crash. And it's got protection. It'll protect you on your way down, and it's delivering stocks that are primed for explosive moves higher. And it has a hedge. And this hedge won't just help you save you from a bear market. It'll crush it. It destroys it. We had a profit of over 40% or 35 or 40% during this period right now. You got to check this out. Now, considering the markets we're in right now, I honestly don't know if there's a better time. I honestly don't know if there's a better time for this strategy. You really need to check this out. Click the link below, reserve your spot. Complete strategy tells you when to buy, when to sell. You don't have to sit there in front of the market. It has a built-in hedge that doesn't just protect your portfolio. It goes way beyond that. It helps you capture huge, huge moves during crashes like this. Folks, I created the strategy almost a decade ago, and I honestly cannot think of a better time to utilize it than right now. This is why we're doing this. Folks, when I show you everything, you're going to be beside yourself. This is better than sliced bread. I'm not kidding. Tomorrow, Thursday, 1 p.m. Eastern Time, 12 o'clock Central Time. You don't want to miss it. Follow the link below. Reserve your seat now. Trust me, you don't want to miss this. This is going to be big. The hedge alone made over 400% the last few days. This is explosive gains during this type of market. You can have your cake and you can eat it too. And the next time the market does this, or even in the current crash, you're going to be laughing all the way to the bank. All right? Not to the poorhouse, to the bank. Follow the link below. Get in on this. This strategy is literally tailor-made for what we're seeing in the market right now and for big explosive moves. And folks, with what I'm seeing with the coronavirus, schools closings, we may have a lot of volatility on the plate for the next few months. I mean, look at these VIX levels. Look at this. This is crazy. This is 2008. We went to 54. We're at 46 right now. You don't want to miss out. Volatile markets, down markets, I've got you covered. Follow the link below. 1 p.m. Eastern Time tomorrow. Thursday, 1 p.m. Eastern Time. Don't miss out. Follow the link below.